Welcome traders to this video analysis from Admiral Markets on the 1st of September with a new month ahead of us. Let's take a look at what we will review: the euro dollar, pound dollar, dollar yen, and AUD USD as always. But first of all, the material here is intended for a global audience. Please take into account that the session may not be suitable for everyone. To get the corresponding info, go to admiralmarketsglobal.com, select your country, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video analysis is for educational and informational purposes only. Thank you so much for your attention on this risk disclaimer. So this week we have many webinars. Yet again, of course, weekly FX recap today on Monday, and then Tuesday, Wednesday, Thursday we have live trading labs, various trading labs in fact this week as always, and then the Pro Learning Lab we have optimizing approach to exits. Very important topic, exits. I definitely recommend that you join that particular webinar. Hope to see you in one of all of these webinars in fact. And with that said, let's take a look at the charts. First pair on our list today is the euro-dollar monthly chart, and we had a very bearish monthly candle in August. As you can see, the close very near the low. In fact, hardly any difference there. The close at 39, the low at 34. So only 5 pips off in a candle that's more than 200 pips. So obviously a lot of control of the bears in that month, just like we had in July, and all of that is happening after a break of the rising wedge formation that you can see here by the orange lines. So how far could the break of the rising wedge go to the downside? And if we zoom out, you can see that that could be pretty far. Just by putting a fib from here to here, you can see that the bottom of that zone, roughly at the lower 20 levels. But if we then zoom out, the targets could be all the way at minus 272, minus 618, which is 111, 113, and parity. So there is a potentially a pretty big fall possible. Now, we're not there quite yet. Obviously, if we zoom in to the weekly chart, you can see that momentum as well. But primarily the daily, you can see that there is some levels to be aware of as well, such as this fib right in here, and you can see that we're approaching targets. And the daily chart, obviously, a weekly chart, sorry, we're approaching some support levels. So we have to break these levels also to get some more confirmation of that. The 131, the 130 psychological level, the 127 bottom here. Those are things to be aware of. But for the moment, we are definitely in a bearish momentum. So any retracement, any hook back to the upside should be followed by more downside. Zones like right in here, for instance, we can see any tops and bottoms here on the lower time frames very simply could be those support and resistances that we can see follow through to the downside. So if price does move up to 132, 133, those would probably be good zones to look for shorts down to, as I said, the 130 and lower levels. So bearishness on the euro dollar. The pound dollar monthly chart is looking pretty much similar. Last month, pretty bearish candle, July 2. The difference, though, is that it had a very large run up on this pound dollar, but you can see that we broke that particular channel to the upside already last month now with this good breakout candle. So that means we could be retracing this entire swing high, swing low, and we could put a fib on that swing, and usually speaking, price would be bouncing at any of these Fibonacci levels. The question is which fib will be the fib where price bounces up to the upside. It could be as low as the 88.6 fib, in fact, although I do expect some kind of bounce at all of these fibs, or most of these fibs. For the moment though, bearishness reigns and is powerful here. But if we look at the daily chart, you can see that the price has a pretty good fall. What could happen is we get a bit of a retracement of that fall before we continue lower down to the bigger fibs on the weekly chart. So a bit of a hook back maybe to 168.50 to 50 fib, or the 38.2 fib or 61.8 for further downside is very likely, I think, with the pound dollar. AUD USD monthly chart, and you can quickly see that the last 5 monthly candles really didn't go anywhere. A lot of sideways move here on this AUD USD, waiting for the break of the top and bottom of that consolidation zone before anything can be done, in my opinion. Otherwise, it's just a big old range. Last but not least, the dollar yen monthly chart. You can see, of course, the very big uptrend we've had. Price stopping at the trendline, resistance trendline here. But now, last month and the month before, 2 bullish candles in a row. So if we push to this trend line once and for all and through this 105 top, then price could be accelerating to its targets. Which targets? We can put a fib on this, and you can see the 38.2 fib bounce we've had here. The target of that break, that bounce, excuse me, is 111 and 120. So if we break above red, those will be the targets to think about on the dollar yen. Thank you, traders, for joining us on the video analysis this week. We hope to see you in one of the webinars, of course, or all of them, in fact, upcoming webinars this week. In the meantime, wish you a great week and talk to you soon. Cheers.